Hey, thanks for listening to our personal money segment today, delivered by Pax Financial Group. The content is delivered to you from both research and our experiencing helping about 1,200 families every day just make better money decisions. We believe that if you can make prudent financial decisions, you're putting you and your family in a much better position to live a more meaningful life. So thank you for joining. I hope today's content is going to be helpful to you. My name is Daryl Lyons. I'm the CEO and co-founder of Pax Financial Group. I'm here to be your guide and introduce you to your main guide today. So I'm looking forward to that. David Alvarez is here. He is a certified financial planner, and he has come here through Wall Street, through JP Morgan, but originally is from San Antonio. We are happy to have him. Now, today's topic is very timely, and these are the top 5 ways to invest in today's markets. And so, David, I'm going to let you kick off number 5. What would be the number 5 way to invest? We'll do it. We'll do a countdown version of this. So, what's the number 5 way to invest in today's marketplace?
Well, we could think about, waiting for the recovery, right? That's the question we get from a lot of clients. Why don't we just sit this out and wait for the economy to recover? And so that's a very good question. The stock market, though, is forward-looking. Economic data is backward-looking. So I tend to think about 2008, 2009, when we were going through the great, financial crisis, and the stock market bottomed in March of 2009. And so you ask yourself, okay, so when did unemployment peak? Well, it wasn't until October of 2009. And so you had about 6 or 7 months where economic data was worsening. Literally every month, unemployment rate was going up, GDP numbers were going down, but the stock market had already turned around. So if you're waiting for economic data to show a recovery, the stock market has already moved on. And so it's important that, for long-term investors, that you don't miss that.
That makes sense. Now, as we kind of move down the list to number 4, I'm we talked a little bit about this order as we were preparing for the meeting, but as I kind of improvise here, I kind of want to put number 4 in a good context to contrast it with what you just said. So, waiting for the market to completely recover. What about trying to time the bottom of the market? Would that work for somebody?
Yeah, it's tough. Timing the bottom is very tough. And what we look at, again, as long-term investors, when we are in a high volatility environment like we are right now, we have a lot of big down days in the market, but we also have a lot of big up days, and it's important to stay invested. There's a statistic, looking back at the first 20 years of this century, right? So since the year 2000, from 2000 to 2019. The U.S. stock market has returned on average just over 6% per year. And so that doesn't sound too exciting maybe, but for somebody who invested $10,000 on January 1st of 2000, at the end of last year, that was about $32,000. So you more than tripled your money over 20 years. And so, for a long-term investor, that's great. But if you missed 20 days, the best 20 days over those 20 years, you were basically flat. And so missing 20 good days in the stock market over 20 years wiped out 2 decades of investment returns. And so it's important to stay invested. And the crazy thing is, if you look at those 20 good days, the 20 best days, 6 of those days happened within a week of the 10 worst days, right? So it's not, it'd be ideal if we could just wait out and, when are those good days coming, right? But those good days are often mixed in with our really bad days, as we've seen in the last couple months.
Yeah, it's been really evident just recently. That's good information and good to put that in that type of context. Number 3, what about stock picking? Is it a good strategy in this market to go out and cherry pick some what might be winners?
Yeah, it's tempting. I know there are a lot of household names out there that are struggling. And so you see a stock and you recognize that name and you think, well, that company isn't going away. And the stock is down 80%. Why shouldn't we buy this stock? And so we tell our clients, let's ask ourselves two questions, right? Is the overall stock market going to zero? All right, that's highly unlikely. It's highly unlikely that the overall stock market will go to zero. Will an individual company go to zero? We have definitely seen that happen, right? So in the last 2 decades, we've seen household names go to zero. If you think about Enron, you think about Lehman Brothers, there are plenty of names that were once considered household names that went to zero. And so when you're thinking about going out to buy individual stocks, always take into account the fact that this could go to zero. Just because it is a household name doesn't mean it can't go to zero. And so diversification is still important. It's even more important now in this environment.
Yeah, that's a great point. Yeah, we often forget the WorldComs and the Enrons and the Blockbusters, and yeah, there's plenty of names out there. Number two, what about gold? A lot of people talking about gold right now, and obviously it's been a safe haven. So, what are your thoughts on gold as an investment option for people to consider?
Yeah, there are a couple of different ways you can buy gold, right? You can get it through an ETF, an exchange traded fund, and that's just like a publicly traded stock that tracks the price of gold. That's a super easy way to buy gold. You can also go out and buy, gold bars, and I'm sure if you stay up late at night on television, you've probably seen commercials where they sell gold coins. And so there's plenty of different ways to go out and buy gold. That here is, what we think about gold is this is a great investment if you're worried about the US dollar, the value of the US dollar. So how is the US dollar relative to other global currencies? So if we were in a crisis that was specific to the United States, I would say, let's seriously look at gold as a hedge against devaluation of the US currency. But in our current environment, we have a global crisis. The US dollar is still the reserve currency of the world. I don't know if gold is going to play the role that some folks are out there saying it will in this environment.
Yeah, that makes sense. I know there's a lot of different ways gold's played, so thank you for sharing some of those. Finally, number one, dollar cost averaging. What is that and how does it work?
Yeah. Dollar cost averaging is, it's an industry term. It basically means you're taking a fixed amount of money and investing it at regular intervals. And so, the average American is dollar cost averaging and may not even know it. They're putting money every paycheck. There's a little bit of money that goes into their 401k. So they're dollar cost averaging into the market. And so we look at dollar cost averaging as a great way to get invested in this market because of the volatility. This year has been extremely volatile. And, if you think even before the pandemic, we knew coming into this year, we were looking at a presidential election. We had an impeachment. Remember that? That seems like ages ago. We had brush fires in Australia. We had armed conflict with Iran. We had all sorts of global issues, trade tensions, Russia and Saudi Arabia dealing with oil issues. And so we knew this was going to be a volatile year before we had a global pandemic. And so the volatility is something that we're expecting to continue to see. So for clients who are sitting on cash right now, we're advising them, let's not jump into the market with, a big amount of cash right now. If you just sold a home, if you just sold a business, if you just received an inheritance, let's put the money in the market over time so that you still have exposure when we have these good days, but that the dollar cost averaging will really minimize your volatility over what we expect to be a pretty bumpy year.
Yeah, that's just sound, prudent advice, and certainly one that I'm favorable of right now in this environment. Look, those are 5 ways to invest in this marketplace, David. You did a good job articulating them well for all of us to be able to digest it. You can email David directly. It's real simple, David at paxfg.com, and he can answer your questions because many of you guys have very unique situations, and the investment advice here is just general in nature. So you need to just digest it in the context of your situation, your time horizon, your risk tolerance, right, David? I appreciate you tuning in. Be safe out there and rest at a fast pace. Thanks, David.
Thank you.